I'm Dan Gramza, live from the 2018 San Francisco Money Show. And I'm here today with Cotton Graham, who's in a very interesting area of the marketplace, and that's energy. Graham, thank you for being here.
Oh yeah, my pleasure. Thanks for having me.
I'm glad you're here, Cotton.
Yeah, I'm excited to be here.
And tell me a little bit about your background, what the company does.
All right, well, again, my name's Cotton Graham, and I've been in the oil business for about 24 years now. I got into it as a kid, just learned how to start putting deals together, making connections with investors, geologists, geophysicists, deal makers. And I learned at a young age, basically through the School of Hard Knocks, of how to create a deal, how to fund a deal, and how to get a well drilled and start producing oil. So, I've been in this business for, since 1994. So
you got some experience there.
Just a little bit, and I learn something new every day.
Yeah,
it's a fun business. I really love what I do. American energy is something that I'm really passionate about, and you can make a little bit of money in it if you can find oil.
Well, is that your primary focus, oil as opposed to natural gas?
Yes, sir. We're primarily oil focused. I just don't really see a strong market for natural gas right now. I think oil is on the move. G2 Petroleum is a 10-year-old company that I started back in 2008. And, I created it to provide partnerships or joint ventures for private, high net worth, let's say accredited investors. Because domestic drilling partnerships, they've got a lot of benefits. Not only the tax benefits that are encouraged by America, you're able to write off almost 100% of your investment into domestic drilling programs. So the government is allowing you very rich tax benefits to develop American energy. But again, if you can find oil, which is tough to do, and you can make some money in it.
Let's talk about those tax benefits, because I think that could be of interest to a lot of people. When do you get to take those benefits? Is it at the end of the first, if somebody invested money, at the next tax period, do they take all 100%?
Well, that's a great question. Yeah, no, it's really a great question. The tax benefits are lined out like this. You're able to ultimately write off 100% of your investment into domestic drilling. However, you're able to write off roughly 75% in the first year that you make the investment. And those intangible write-offs are costs associated with drilling a well, getting a well drilled, fuel costs, equipment rental, labor rates, things that you're not able to recoup capital from, salvage value. For instance, the 75% is intangible write-offs. But the remaining 25% is called intangible write-offs, and that's for steel, downhole tubing, rods, pump jacks, all of the steel stuff on the well that goes into completing and equipping a well for production, that if the well goes dry, you can take all that stuff out and salvage sell it, so you can make a little bit of money. So that's really how the tax benefits are lined out for high net worth investors. You're not able to totally reduce your tax bill, but you can minimize what you're paying Uncle Sam, put it into domestic energy and something that could generate very aggressive monthly income for you and your family.
Well, tell me this, how many partnerships do you have going? What part of the country do you focus on?
Yes, sir. That's a great question. Right now, in the last 10 years, we've probably done close to 30 different partnerships. When I started G2 Petroleum, we were investing very heavy in the resource plays, the shale plays, like the Bakken Shale in North Dakota, the Wattenberg Formation, the Niobrara Shale out in Colorado, or even the Eagle Ford Shale down in South Texas. Permian Basin shale plays. These huge wells that are horizontal drilling. You're drilling, 7 or 10,000 foot vertical, and then another 10,000 foot horizontal. So, along with that drilling, they're very expensive, right? The fracs are they're very expensive. So your cost to drill a well, complete a well, frac a well like that, you're probably talking about $15 or $20 million to drill one well. And
what I'd like to do, let's take a short break, because I'd like to hear more about that and the techniques that you're using and how you're producing it.
Sounds good.
So, live from the San Francisco Money Show, we're going to continue in just a minute.